and welcome to Sibos 2018 in Sydney. I'm Hannah Wallace, and with me now is Tim Clarsen of Murex, and we're going to be talking about artificial intelligence and risk. Hello Tim, thank you very much for speaking with us today.
Thank you.
Now I firstly want to talk to you about your session, the title of which is Teaching the Machine, Can AI Accelerate Pricing Models and Optimise Your Capital Market Infrastructure? Can you tell me about the title and what the answer to it is?
So the background to the question really is that banks have been for some time trying different methodologies and using different technology to try and accelerate the speed of the calculations that they're doing, particularly in the derivatives area. And this is really to solve problems around real-time pricing or counterparty credit limits and doing big simulations to do that, so in this field of risk management. And we've been looking at the field or emerging field of artificial intelligence, and we're thinking that it could be a technique to dramatically improve these performances. Mm-hmm. So we've done a study recently, and where we were pricing, we built a machine learning algorithm where we were able to price millions of complex derivatives very, very quickly, and we were very happy with the results. And so that's what I'll be presenting later in the session. But so in answer, yes, we think it is something that has great potential.
All right, and what problem does machine learning address in risk management?
We think that artificial intelligence has potentially broad application within risk management, which in itself is a pretty wide field. What we were looking at specifically is trying to address the problem of the huge number of computations now that banks need to run within their risk management platforms. And this is being driven both from the business or users, so for real-time analytics, for example, and also by the regulations, which are pushing banks to do more and more computations. So upcoming regulations in market risk, for example, are going to mean that banks will need to do at least 60 times the number of computations that they do today. We think that it is a technique that has application. So we wanted to study whether it's possible and what type of benefits could be found using things like machine learning.
And in theory, AI promises large efficiency gains in risk management, but in practice, are these gains achievable?
Sure. So we did a study where we were able to price millions of complex derivatives, and we did this in under 7 seconds. So this proved to us that it was an area that is or does have great potential. But of course this was, it was a fairly limited study. So what's next is you would need to build, you'd extend your algorithms to be able to price all sorts of different complex derivatives. Mm-hmm. But we definitely see that there's terrific potential. Now, on the question of adoption and whether it is something that can be done in practice, so this is going to take further experience within the industry, and it'll take regulators, the people who eventually approve the models being used in risk management, to be comfortable. And so we're going to continue our research, and we will look forward to sharing further results as we go, but we feel that it's a very, very promising area to explore.
Fantastic. Well, I look forward to listening to your session later. Tim, it's been a pleasure.
Thank you.
And thank you for watching.